What's going on, guys? It's GBP baby. Welcome back to another video, another weekly review, slightly delayed. I do usually post on Sundays, but nonetheless we're going to get straight into things. So yeah, incredible week last week, something that I was finally waiting for and wanted to see, which is expansion outside of consolidation. You can see for about 1, 2, 3, 4, for 5 weeks we're in pure consolidation. And if you've been watching me for a while, you would have known that I was like struggling in these weeks just because price was getting very, very resistive. And what I mean by that is that very high resistance, as in there wasn't much movement. Yes, we were moving lower, but there wasn't a clear willingness to move lower. But now, after seeing last week, you can see there's a clear willingness to trade higher, which is great because it puts us on the right side of the market, and we can start looking for setups to form that can help us get in on some nice moves as we run towards the end of the year. So there's a few things I want to bring our attention to first. First of all, we do need to I'm going to bring our attention to these lows. So this is south side liquidity, which has been grabbed on a weekly basis, very significant. And then it's going to be this high as well. So this high is actually a breaker. I do have a video on breaker. If you type on breakers, if you type in GBP baby breakers, that video will pop up, should pop up. But nonetheless, we got a low, we got a high, we got a lower low, and then we have this beautiful expansion. So what we're waiting for is for price to return back to this swing high right here, because generally speaking, before we continue on higher, price should return to this breaker and then use it to springboard off of to then send it up towards its premium PD arrays. So with that in mind, let's mark out the high of this, and then we can mark this out as a weekly high. And as I said, once price trades down into that, assuming it gets down there, then it should be very sensitive to it. So I'm going to put weekly high like so. We'll move this to the right and to the center. There we go. So now we have this weekly high, and then we also have an inversion fair value gap, which that weekly high is actually residing inside of. So between this low and this high, this is a fair value gap. But now that we've traded through it on the upside and closed above it, it's now going to be an inversion fair value gap. So we can look at this as a weekly IFVG. And again, price should treat this as a springboard in that it should respect the 50% level of it. So I don't want to see price drop below that 50% level. And then it should provide support for price to help send us into our premium. So in terms of what do I mean by premium? Where do I want to see price trade to? Well, there's this bearish order block up here. And you can see it's lined up with a beautiful imbalance, south side imbalance, SIBI as ICT likes to call it. So we can draw out this as a nice premium target for price. And I'd like to think that we can start to make our way up towards this. Now, that doesn't mean that price is necessarily going to trade up to that this week, especially not after a week like this last week's. But my point is we now have a drawn liquidity because there's an imbalance up here for price to fill. So we can put weekly fair value gap. And that way we have some kind of directional bias for price to be moving towards. So now we know that we want to see continued upwards price action. So as we're trading these weeks, then we should be looking for continued support of that, and anytime that gets violated, obviously it's a signal that we're on the wrong side. But nonetheless, the 50% level of this inversion fair value gap, I'm paying very close attention to this week. The reason for that is because the very lowest I'd allow price to trade this week will be that level. Any lower than that and I'll be a little bit suspicious. Don't get me wrong, we can wick down there, so I'm happy for us to tap into the weekly high, for example. But what I'm saying is if it starts moving very heavily, like on a daily and 4 hour, and we're heavily attacking this inversion fair value gap, at that point we may have to start thinking about it coming back below it and then using it as resistance, and that's not what we want. So yeah, I'm paying very close attention to this level, and then we can also start looking at other weekly highs. So obviously we have last week's high as a potential target, but then this high is the next level which I like the look of. So let's get that marked out as buy side liquidity. And we can put weekly because it's a weekly high, and weekly and daily highs are very significant to price, and you can see that here. Look at how price traded down into it, and then left it, and that's from a weekly low. So we're treating it the same way in terms of price wanting to draw up to it. So let's now drop down to the daily, and you can see beautiful expansion to the upside. We had 1, 2, 3, 4, 5 days of upside. Now usually after 2 days of upside delivery, or after 3 days of upside delivery, we need to be careful. But the fact that we've got 5 days, we need to be especially careful and anticipate that price may want to give us a potential discount and give us some down close days. So moving into tomorrow, Tuesday and Wednesday, I'm happy for us to create the low, ideally, around that weekly high I was talking about. And then moving towards the end of the week, Thursday and Friday, where we have high impact news, that's when I'll be thinking about, oh, we've got PPI as well, I didn't realize. That's when I'm going to be thinking about more expansion to the upside. But until then, I want to see downwards price action, because typically for a week to expand higher, we need an open, we need a low, and then we want to see the expansion to the upside. So with opened, I'm looking for some kind of low to get created, and I'm going to allow Tuesday and Wednesday for that. And then I want to see more expansion to the upside to our weekly buy side liquidity targets. Now that we're on the daily, we can home in on where we want to see price trade to specifically. So between this high and this low, if we draw this out, we have a daily fair value gap right here, which is within the weekly fair value gap. So this is just us getting more specific and more, specific as to where we want to see price. This weekly buy side liquidity is further, further strengthened by the fact we have a daily high here, we have a daily high here, and we have a daily high here. These are all what we call relative equal highs, which is what we like to see. And then again, the weekly inversion fair value gap, you can see it's also coupled with this previous high. Price loves previous highs. So 4 hour, let's take a look. I'm happy for price to trade down lower. I'm looking at this order block again. Everything I've just said is obviously the same on the 4 hour. I don't want to see price trade below that weekly high. I'm happy for price to dip down into here, and moving into tomorrow, I am under the impression that price may just want to dip down, create some kind of low maybe during the London session or early New York, and then I'd want to see some kind of potential reversal as we move into Wednesday and Thursday to start running for our buy side liquidity targets. But what I'm saying is that this bullish order block, these 4 down consecutive candles, 1, 2, 3, 4, should act as a strong bullish order block for price that can help springboard it higher. So I'm going to be paying very close attention to that. You'll also see that there's obviously this massive range that was created on the back of non-farm payroll. Let's take a look at that. And the 50% level of this range is something we also want to pay close attention to. Let's go to the 4 hour actually, and we'll use this and this as the levels, just because the higher time frame is more, the higher time frame leads basically, which is why I've gone up to the 4 hour. So this level as well, although it's not a specific level, although it's not necessarily it is a PD array because it's what we call consequent encroachment. When price comes down into here, depending on the time of day, we may find that price will react at this level. Now, it might not, but I'm just going to keep it on our charts because, again, depending on the time of day and when we get to that level, it may be a buying opportunity on dollar with shorts opportunities forming on the pairs that would allow us to trade higher. Because, like I said, price doesn't necessarily need to come right back down to this high, down to this, the order block from this high to this low. Price doesn't need to necessarily touch it. It can just come to the 50% level of the range it's created, and that would be enough. And if anything, if it does do this, that will show price to be more bullish anyway, because it's failing to get down back into the order block. It's showing a willingness to go higher, which is what we like to see. We also have the 25% level right here that we're kind of just meandering around, but ideally we do get at least lower than that. I will mark it out as well, just in case, you never know how this London session is going to go. Actually, I'm not even going to do that, because looking at the 1 hour and the 15-minute, I would like to think that we can get some kind of sweep below these lows to get down into this at least. So that's going to be everything on dollar. I hope that all makes sense. But yeah, it's nice to finally see some large expansion. Let's now head on to GBP USD. We'll start on the weekly, and obviously if we're expecting an up close week on dollar, we want to see a down close week on pound. So where could pound be reaching for? Well, we have a nice beautiful weekly low right here, and there's a fair value gap right here as well. So the first PD array is going to be this fair value gap between this high and this low. Let's draw that out. We'll make it red, and we can put weekly fair value gap. And this is my draw for price on pound right now. So we'll get that marked out like so. Weekly fair value gap, and you can see beautiful displacement, 3 candles, 1, 2, 3, taking out that low. And then we have a nice inversion fair value gap, and the same thing applies. If price returns back into this range, it should be able to provide resistance, and that's assuming price even manages to get up there. It might not even be able to do that, and as we drop down to the lower time frames, we'll be able to identify that much better. So this swing low right here is going to be a significant swing low, so let's get that marked out as sell side liquidity, thicken it up a little bit because we like it thick, don't we, lads? And then we'll have to drop down to the daily and take a closer look. So obviously down close day on Monday. Remember, I'm still waiting for the manipulation of the week, so I'm happy and waiting to see if we can get any kind of potential rallying on price. So I'm happy for this Monday high to get taken. Let's mark that out. If I see that Monday high get taken out Tuesday or Wednesday, I'd expect that to be just a false rally, and then I want to use that as a opportunity to be looking for shorts, what's in the premium, before expecting us to then attack this sell side liquidity down below here. there's a fair value gap with inside a fair value gap. That makes it very high probability, just like I did on dollar. And don't get me wrong, depending on, well, let's go to the 4 hour, take a look. Again, price doesn't necessarily need to rally up here for now. It really just depends how bearish we are. So like on dollar, for example, although we do want to see some kind of, dip down below Monday's low here, GBP might not necessarily take out Monday's high just because of how bearish it is. So we do need to take that into consideration. And to be honest, looking at the 4 hour, it's looking unlikely that price is going to manage to get back above that buy side liquidity. It can do it. It can do it, and I'm happy for it to. But we should just take, things like this fair value gap into consideration, and the fact that we're respecting bearish PD arrays, such as this is a bearish order block, we traded into it, volume staying below it, we've had expansion to the downside. So now the next, significant PD array is this bearish fair value gap. So I'll be watching this very carefully, because what if we find that price is like really resistant and it's not moving much on pound, in the early hours, and yeah, we might rally into it, but if we're not getting anywhere near that Monday high, but we find on dollar that dollar may be dipping quite low, that might be indicative to us that pound's going to move quite expansively and then run down towards our sell side target. So yeah, looking at this time frame now and actually dropping lower and seeing this, I'm not really too concerned about this high getting taken out. I shouldn't really be thinking about it. Right now I've got my eyes set on this 4 hour fair value gap. I want to see price stay within it and then below it ideally, and that can help us with our bias of getting towards this range right here. We will take a look at the 1 hour. Not the cleanest price action. Beautiful expansion again. We traded back into this bearish order block. See all this up move from here to here? That's the order block, and you can see how we traded into it once, traded into it twice, and then we had another level of downwards delivery. So again, any kind of return back into this range, I'm seeing as what we call redistribution, because I'm happy for price to continue to give us those shorting opportunities until we get to our south side liquidity target. So yeah, that's going to be everything on pound. Yeah, I hope that all makes sense. That's my bias anyway, generally speaking. Honestly, like the main thing that we need to know when we're trading is where we want to see price trade to. And that's what I'm making clear. I want to see it go here, I want to see it go here. It's just that there's different ways in which it can deliver, and that's something we can't always predict, especially in conditions like these, and especially after such a big week last week. But nonetheless, let's go to the weekly. Beautiful expansion on euro. Same thing. We're looking for some kind of discount PD arrays that price may want to trade into. Now we have these bullish order blocks down here, but since we're now bearish, the bullish order blocks I'm not really that interested in terms of PD arrays. I'm more interested in weekly lows, such as this one right here. So let's get that marked out. And then we have a breaker again. We've got a high, we've got a low, we've got a high displacement. So we're looking at this low. And what we can also do is we can look at the range as a whole, because wicks are ranges too. So we should treat it like a fair value gap. And I'm also going to mark out the midpoint, just because we might find that price may want to rally a little bit more on euro. And then as we drop down to the low time frame, we can use that to our advantage in terms of framing potential, highs of the week. So here's the daily, and you can see a fair value gap form today, which is absolutely gorgeous and ideal and in line with our bias. So it'd be nice to see if euro can trade up into that, moving into Tuesday and Wednesday to create some kind of high. And then that's when I'll be looking for shorting opportunities with the expectation to run out these relative equal lows below here later on in the week. Now, what if we are to run to these lows, say tomorrow? If that's, as far as I'm concerned, if we take out these lows moving into tomorrow, price will probably just keep running and keep dropping very steeply. Let me say that again. If we run into these lows, this sell side liquidity tomorrow, it will do it aggressively and it will keep running. That's how I'm seeing it. But if price, takes its time and delivers how it's supposed to, in quotation marks, then, I'd like to see it do some kind of rallying. But it's hard and probably stupid and not really the smartest thing to start thinking about premium PD arrays when we're clearly on the rush to some kind of sell side target. And that's why when we move into these kind of trading days and we want to trade them, it's just a matter of us getting in above the opening price. It's not necessarily us seeing exactly where. So although I'm marking out these levels, when I'm actually trading and I enter the new day, I'm just happy to be above the midnight open to get in on a shorting opportunity. I don't necessarily need it to hit my target. If it does hit my target, great, I can add to my position, it supports my bias, and we might even get in, we'll have some nice risk management. But if it doesn't, it's not the end of the world, because I'm just looking to get above that midnight open, because I'm expecting down close days, right? Yeah, so that's pretty much everything there as well. There's not really much more for me to say. I hope that will make sense. But generally speaking, for the week, I want to see a down close week. It's just that we may find quite a lot of manipulation. And look, see this rallying that we have? Wait, where is it? Monday. Oh, there wasn't really much rallying today, was there? Let's go to the 1 hour. Yeah, there was rallying. So this kind of rallying, this is supportive. I want to see, because think about it. If we want to see a down close week, if we think about the week as a whole, so if I mark out, you know, Sunday opening price, which was right here, and if we're expecting a down close week and we want to go short, then we should be selling above that Sunday opening price. Are we above that Sunday opening price? Yes, we went above it today. Now, that doesn't mean go short, go short. That's not what I'm saying, guys. But this is how I'm thinking of price. Like, if I'm expecting a down close week, right now when we're in these kind of ranges up here, I want to see high resistance, because we're in a premium that shouldn't be lasting too long. So yeah, you know what we're going to do? We're going to keep this on our charts. Definitely hit the notification bell so you stay up to date with this week's videos, because I'm going to be watching this Sunday opening price throughout the week, you know, and we're going to watch how price treats it. And every time we're above it, again, if we're expecting a down close week, it should give us selling opportunities. But it's not that simple. And then obviously we have our ideal targets. So these levels which I draw our attention to, the fair value gaps and whatnot, this is ideal for price to trade into. It's just that it doesn't necessarily need to fill the fair value gap. And depending on how bearish we are, we might not even necessarily want to reach too far into it. So that's going to be everything, guys. I hope that will make sense. Again, very interesting week to come, but I do think it's going to be a good trading week in general. I did actually execute some trades last week on my demo here. Let's take a look. Yeah, 1 second. Now, I never recommend trading non-farm payroll and such, but in my defense, I went short before Friday. So I went short on the Wednesday. If you watch some of your last week's videos, you know about my bias last week, and I wanted to see, you know, I wanted to see us trade on lower. So anytime we traded on higher, and you can see price was rallying at this point, that's why I was happy to go short, because I saw that price was trading higher. And any kind of rally when we're clearly on on a downwards trajectory is an opportunity to be going short, which is why it's the same bias here. Like any kind of rallying that we're seeing, we should be looking for shorting opportunities, because we have a bearish bias, right? And then I exited below some lows over here. And then GBP, there was also a position, a couple, which I did, which was, again, we were rallying on the Tuesday, so I went short. Why? Because it was a suspect rally. Any kind of rallying shouldn't have been happening. Then we finally broke down, breaker could have entered there, and then beautiful displacement to the downside, running out these lows. And then this is when I did actually trade non-farm payroll, and I don't recommend it at all, as in just for dangerous sake. Like, you shouldn't be trading non-farm payroll. But my point is, look at where I'm shorting from. I'm shorting when we're in the premiums. You see, we're going short when price is trading higher, and then we're buying back our positions as soon as it takes out significant swing lows, you know. So that's something to think about. If you want me to go into more detail on this, definitely drop a comment below. I'd be happy to. I know I need to. It's just, yeah, I'm gonna aim to. But I'll see if I can get some more trades done this week on this account, so that you know, we can look through them as we're going along with the week. So that's gonna be everything, guys. Thank you so much for watching. Don't forget to drop a like, drop a comment, smash subscribe, join the mailing list, turn on post notifications, because this week is gonna be exciting. And yeah, I'll catch you in the next one. Peace.